Hey guys, welcome. Precious metals update with the market sniper. Give us some puppy licks to the face. That's the licks button, spelled L-I-K-E-S. Yep. You see what I did there? And give us a share as well. We appreciate that. No adverts on this channel. So we're talking about precious metals, and the key aspect that we want to handle on is, has anything significant happened over the last day or so? Here's our take on that. More specifically, I'm going to be talking about silver because I think it's more clear cut, but we've got to start with the God market gold, and it's the weekend now. So there was a little bit of a rally and a little bit of a getaway, and again some resistance in the field of the 1800 points. So a little bit of a pushback against the anti-fiats. The same happened on Bitcoin, the same happened on gold, that happened on silver, that happened on a number of places. So there was a little bit of probably a mini surge of dollar strength there that pushed back as we went into the end of the week. Very typical, just before the final close, probably a not-for-profit sale in the last minutes. But anyway, let's leave that for now. So this was your previous highs all the way up here, 2000s, and why haven't we done much since then? Well, we had a long run that started quite a long time ago, right down at the $1300. So for gold, that was actually already a decent up leg. Down, down, down. This is kind of squaring up after these big smash down sells that was here and here. This is squaring up, and what I've got on here, you know, I'm not the indicator guy, but what I am illustrating to you right now is that the historical volatility is contracting. It is contracting. In other words, I'm highlighting this. You can see this along the top. So we're looking at the lower box. There's a lot of detail that suddenly popped up on the price chart. We'll come into that when we drop time frame. But that volatility is squeezing lower across the highs. That's generally good for precious metals. Let's go and have a look. We've been in this broadening structure, which we haven't broken back. The broadening structure is what we call HVF slide. That means you are expanding in a downwards direction. You'll see a splitter, a pink line and a red line. The expectation is you break the red line. The midpoint is this dotted line over here. We're in the topper half now after a couple of tests. Of course, I'll also remind you of the 1680. That was a key line. Let's drop a time frame so we lose some of that excessive detail from all our key levels of significance. Now, I appeared on Palisades Radio and also XT Bullion, and I warned that these up legs with broadenings lead to sell-offs, and you got a sell-off there, and again you had a bull pole but with a broadening structure that led to a sell-off. In fact, you had a little bit of a head and shoulder on there. Let's drop a little lower still. Let's take it into the 12-hour mark. We're going to go to 18 hours. That's quite kind of eccentric of us. Let's do that. 18 hours. So that mini head and shoulder there, that kind of goes like this. Let me draw with the pen that they provide. That will be the one. So we got a little bit of a complexity as a shoulder here, two touch, but you could see you were sitting on the neckline there and then you supported on it. That's typically how you conquer a key level, by the way. So there you go, hammers there, and then a look one way, go the other way, again there, giving you a leg up that took you to the next highest point. In fact, you made this non-farm payrolls upside HVF on a lower time frame. Just, there we go, and that gave you your head top. That was the end of the good news on the upside. So terrible non-farm data was coming in, and in spite of that, metals then subsequently got smacked back down. You were back down at the 1786, which was our designated neckline in the light blue. Let's just show you that. And as a result, you were back off down to the races. This was your key level of significance in the light blue and the dark blue here. The dark blue over there is your 1800 mark. Your 1800 mark, which we were battling with, we've been wrestling with, and we're going to come back to that in a minute. Anyway, let's clear that face now of those drawings. Let's see, do we have an eraser? Might have to undo them. Done a little bit of silly sketches there. So that head and shoulder performed, by the way, to its low side. We did say if that micro would perform, you'll be back down at 1734, but we did also say we didn't think it was going to do 1680. I've done so many chats on precious metals where we've discussed the 1680 level. This was also a level which we resisted at twice before the big COVID sell-off, and then we rallied back up, and then we dipped again on a smaller scale before we continued our upward move. So metals ignored the COVID and ran on to make its 2000 high. That was a far more brutal event generally for Bitcoin that eventually traded sub 34,000. Now the one cautionary I will add is if I draw that line in there and just let's make him pink and muscle him up a bit, there is a little bit of a potential for a rising wedge here. This is again the core. So we had a falling wedge into your head and shoulder target that's set you up nicely. Again, a falling wedge there. This time it was on a key level that was the 1750 itself that you squeezed off of. You ran into the 1800. When we get to 1800, we seem to be running into problems. Down. Then we were squeezing up against the 1785. That was the neckline of this. There's your right shoulder there. Prior selling off, that was your head. Like that. And then of course this was your double shoulder, where the final part was your real shoulder and the other was just clambering up onto the 1785 level. So you have a bit of a risk here of a rising wedge for gold. And that's a point worth observing. But remember that also rising wedges can on occasion, under the right circumstances, turn into push higher events. So it can be if you overcome this 1800. But my suspicion is we're going to come and lean up against this and continue to be knocked back a little bit until we have a little bit of an easing. Only this time the volatility will continue to drop and we'll square up, we'll fall through this lower line, and then we'll set up some structure for some upside. That is my suspicion, that eventually so bear that one in mind, will you? Bear it in mind as I just do a little bit of tidying up here. Whoops, we've got to undo that. Don't want the neckline to go. Okay, so with that rolling over and coming back down, we stay within this broadening structure for a little longer until we've wound up enough to get the momentum to break to the upside. That'll be gold's resurgence. But the one thing that's a little bit encouraging, and we'll have a look at that before we go to silver, is we'll take a look at the gold-silver ratio. So taking you back up to a bigger time frame, in fact let's go all the way back. So this was our top calls. Remember at that point you actually had 128 gold-silver ratio. We said this is your major blow-off and this is your final reversal. Now once we fell all the way from these 113, 114 levels down to the 70 levels, quite some reduction, we started to churn a little bit and we had this channel. So let's have a look at that a little more closely, and we'll do a couple of days in a go. Let's do 2 days. So we were trapped in a channel like this and bleeding up, and then gold actually did better and silver was really being leaned on, and you started to come out of the top of the channel where the expectation was actually a break to the downside. So you had a little bit of a rally from relative strength wise for gold versus the silver price, and that has, what was the high? Let's have a look. 80.5. You just went and touched the key level of 80.638 over there. So 80 was just run, essentially. 80 is right there. 80 was just run, and now you've started to fizzle off back down. So for the first time in a while we've had a sustained period. So a couple of red candles sideways, not too much of anything, and then 4 more red candles. which are pointing to weakness in the gold silver ratio, relative strength in silver coming back into the market. We do want to see that. If you're a bull, even if you're a bull gold, you want to see that, because that's bullish for all of them. Again, the volatility has been super compressed on this time frame, on the 2 daily, given where you once were with the blow off high up top there. So this smacks of downside continuation in time, but you did have a leak out the top. We were highlighting the highs and the lows, and then you just left it. That is a broadening structure. And normally when you have a broadening structure like that, that is has an upward lean to it on a bull pole, as you had there, it tends to, in fact, I'd be more tempted to draw it like that. Let's see what we can do with that gold claw. Get the broadening structure right as a jaw, like that. You see it, it's kind of like a megaphone. We call that a trumpet, and that's how it was rolling from the break of the channel. Take that line off and give our splitter a little bit less prominence. And what happened is you tend to spill out of these. You can have a return move. In other words, you can have a bounce for a bit, but overall the zest is gone, which does mean we were made to wait a little longer, but that this may still be occurring. Maybe it just needs moving over a little bit since I last was on it and watching it. Something more like that. Interesting to see what a significant level the 70 was. Again, as I've already highlighted, low vol over there. So let's go have a look at that silver and see what we make of it all. So on Palisade and SD Bullion interviews, I did mention that this was a big accumulation area. Let's just go up a bit. Let's take it up to almost a 5-day. Let's do the working week. And let's take the Wall Street bets, fundamentals out of it. I think that's almost too much. Let's go back down to 2 days. Maybe that was fine enough. 3. Let's do 3. So this whole zone, we've been battling with a 30. You only stepped above 30 at that point at the high, 30.35. This high over here, your high was 29.9. So 30 on silver, the 28 being a key floor level from the descending triangle from the last bull market. That was the descending triangle floor level. I'm not going to take you there. I've covered this before. Big accumulation zone over here. Whilst gold was doing a falling structure, silver's essentially done a real stall box buying zone over here. Now, when we had this falling wedge, and I was discussing it with the guys on Palisades and SD Bullion, the key point I was looking to make is that it wasn't quite right already at the time to run, but it could be in time, so we would have a final dip. So there is all part of a foundational potential first impulse. This was your second, potentially getting again to the low end here, and then your 3 can sometimes do what we call a type 2 falling wedge, where you have a stab through the low end. I'd given guidance that included 21.75 as a dip buying opportunity when we were around here, and I said I still feel it's going to go lower. We were discussing this in this broadening structure here, and we said that will break. You're in a broadening structure on a bear pole, an ascending broadening structure on a bear pole, continuation downside still to happen. Put your buy limits orders and be patient. You could get filled at 21.75, which has happened. Now I'll highlight this despite the sell-off Friday, it's not the worst candle in the world. In fact, it still was green up, and that's after 2 fairly reasonable moves. So you have gone from 21s, and you did close around 24.4s. So there's been some serious recovery here out of this, and you have broken your falling wedge to the upside. That's a 3-day view. We'll take it back to the daily, and we'll have a closer look at what went on. Clearly there was some selling. as we came into Friday, and you'd had a little also from Thursday, but there was some very buoyant buying in these two candles over there. So we're now on a single day chart. That day and that day were very strong days. Yes, you've essentially got close to a shooting star, so there could be a bit of coming back, a little bit of squaring up. There's normally a return move when you break a falling wedge, which is what you've done. So watch out for that part. There was the break to the downside that led to your 21.75 accumulate being spot on there. You literally would have bought the low. So go watch those interviews. That was prior to this. This was when we were squeezing up here against the falling wedge as a fractal and against our basing ascending grind line of the broadening structure with ascent on a bear pole, which implies continuation to the bear pole's downside. Anyway, so with that accumulation box that we'd suggested people take advantage of, you would have potentially bought the low of what was a long-winded, lengthy period, tapping out at 28. It's just taken lots of time. Each key level you've dropped 26, you had a broadening structure down, rally back up to spill all the way to the accumulation zone, and then you have a broadening structure with a fractal in there leaning against the basing ascending grind line down. Now you have, let's take it into a shorter time frame and get talking on the more current events. I'm going to let go of the volatility index for now so we can just focus on price. And you actually have a inverted head and shoulders that is in play here. So if I put the magnet box back on there, we can select that. Now you could have taken a neckline a little sooner, but I'm going to go for the most aggressive neckline that both have shown to be run. So we've got that, and we make it a solid one, and we'll clone that. We'll clone him, grab him again, and drag him up. So this is just natural technical geometry. Oh, isn't that interesting? Just done the target, and it was clearly just run on a blow off, and then it was stamped on. So even when you have manipulators in the market, it tends to work out technically quite strongly. Look at that slap in the face post the 24.6 run. So what have I just shown you here? What I just drew for you was the inverted head and shoulder. So in our TG Pink, there you go. That is what we call armpit one right there. You can learn all about this in far greater detail, properly recorded in our studio-based recording standards with all the elements that we take very, very seriously in terms of recording our core content by clicking on themarketsniper.com and booking a chat. And you can also get this information well before free views tend to get it, so that you can act on it sooner. So we were calling for this reversal for quite some bit, and there is your head into there, and there is it looks like a left testicle and a right testicle. Let's keep it tidy, Francis. But there you go. Bomb. Note how you break the key level of significance, and then you have a little return dob before you go. Then you have a little bit of a bigger move, run into a legacy key level of significance, and you actually have a spike down return move again to the neckline. The neckline was, wait for it, key round number $23. Then up you go. Again, you run into a legacy level, you pull back, you reach for target, small rest, supporting safely above it, and then you finish. So you might get a little bit of progress decay. What does that mean? No clear new upside for a bit, and the passing of time, the passage of time, that usually has some degree of pullback as well, which does give buy back into the silver narrative opportunity. So an inverted head and shoulder target was run, and subsequent to that you got a little bit of a slap in the face. So all good in Silverland. I think our call for 21.75, which was over here, for expected lows on a dip throughout the bottom, turns out a particularly good entry on an item that you have to be long-term pretty patient with. But if we make new upside, then the 28 and the 30s would fall in our view. And taking you back up to the big time frame, Silver is the one that will overperform when you're suddenly right after being impatient and waiting for so long. This overall price behavior with a marginally lower low here, if I just draw that and through here, this overall structure is very much in the category of a bull flag on a bull pole. Don't forget, you came right down from 11s to make almost 30s, so it's reasonable. It just moves a lot slower. I mean, if you're spoilt and you're in crypto and you think everything should jump the minute you say it and go up 5x every time, you're in a bit of a unique set of circumstances and you won't survive other market conditions very well, is all I can say. So learning to do well in a precious metals market where there's a little bit more patience required, it's good training. And of course that falling wedge is triggered and will give you a little bit of upsy, but a pause now and a little bit around. We'll still hang on the heavy side of the orange box for a bit before getting up and beyond the halfway mark, which is somewhere there's 20, 30, and you're $4 down to 26, and you're from 26 you're $4 down to 22. So that's kind of your midpoint for the box. We want to see us get into the upper half and then start interplaying again with the $28 level, which will probably be a point of a little bit of rest before potentially making it to the next level. So silver looking recovery-esque, but patience is required. So another one that I spoke of and said was doing the business was platinum on the weekly. So you came out of the major falling wedge. I've changed scaling here, that's why it looks a little bit messy. Let's see now, you might have needed that one in reg instead of log. There you go, it looks a little bit more sensible. And you broke out, and then you were in this falling wedge, which is all part of a return move of the macro. Now this macro is truly long. I mean truly long. We're talking, and the bigger the time frames, the bigger the structures. So if I pop that on a monthly there for you, you'll see that the high level mark started from a 2006 run all the way up to a 3rd of March 08, which coincided with the credit dramas, which saw massive sell-off, big pregnant belly second impulse and very low hanging, and also a final stab through on that side. So we've broken, we've sold off, and we're in a smaller structure, and we've broken that, which is part of the return move to the upside. So overall, platinum is doing great. It had a little bit of a rougher candle here though than silver. I can't tell you that's a great candle. I think you get a return move on this falling wedge again, so you can drift off here. So I think buying opportunities will present themselves on platinum. That is a ugly rejection candle. If there is continuation to the downside on the open on Monday, that platinum chart could run into a little bit of problems for a while. But in the overall picture, on the medium long, is going to do great, but could be bought lower down on balance of probabilities. That's my take on platinum. So a little bit on that. We can also show you a more industrial metal in terms of copper. Copper has some of that gold structure in it, but a very nice wind up. It was a little bit skettish and sketchy. We didn't think we would take it. We were watching it and observing it. This over here, this was very disproportionate. A big first, a very quick up and down second and third, but that turned out a great run. Again, legacy target level pushed higher, just avoided making a new high, which is, in my opinion, actually quite good. And then a bit of rejection off here. So it was a rough day Friday overall for all forms of metals, industrial and whatever, but the overall view is one of perkiness. So you could pick your way back into this commodity long for metals, industrial and precious, with a bit of patience and some limit orders. Limit orders are your friend, remember that. Don't pay a market, and choose your level that you're happy to be engaged in and be there, and then stand to. So overall, this is squaring up. This kind of price behavior is what we refer to as squaring up move. So where you did have a heavy lean, we had slides coming down, then you had a stab through, then you were smacked down really hard, and you were finding a floor at the light blue line here, which was such an important and critical level. You had a previous HVF there, you have an entire funnel there. It seems that that's serving as a seam of support for copper as well. So I'm expecting copper to do great, but I wouldn't chase in now. I would pick it off along the lows on a return move down there. While we're at it, we'll cover a couple of others just for fun. Lumber has an HVF that we spotted in our premium community. Go to themarketsniper.com if you want that. You just made target and you pull back. See that little one that was highlighted to our guys? You wouldn't have known that if you're not involved. That little squeezy, and we also had, wait for it, a left shoulder and a right shoulder that gave you a boosted return. So there was your grind line that smacked down, that gave you your head, and the HVS first impulse gave you your inverted head and shoulder, which gave you the bigger target, which actually just recently met. That's quite good that we came and had a look at that one. And there you go. So you would have had a 6 risk reward. I think we might have covered this in one of our trading days as well for visitors. So a little bit of progress decay again, down, and a little bit of churn, but long run it started a reversal. So the notion that lumber's now going to be cheap and that it was just a once-off flash in the pan, good luck with that. First Majestic is a silver miner that we have a lot of interest in, and it's been a tale of woe with the selling of the silver markets coming off, but again it's also showing that it's probing outside of its falling wedge. So it's been a lengthy story, and I think that points to maybe some early shoots green recovery. By the way, the macro on this is huge, and again won't be straightforward straight off the bat, but is a $34 for us with potential overperformance, and there is plenty of time left. Despite making that second interim, you need to see it on the interim time frames, not on the dailies. It doesn't show the wick trading through there, but you did actually make second interim, and then you got stamped on. That was again the Wall Street bets pumpamentals that was caused. But in terms of time, you have plenty time. We've got a trade ending date where you should be closed by 5th November 29. So I'm pretty sure that either the stop gets run or we get to target well before 2029. But that the time allowance, given the such a huge structure since the last bull market in 11, and the break only occurring recently in 20. So that's a 9-year setup. So you get a lot of latitude on there. Also, energy space. We spoke of uranium, and I actually hold UEC, and you can see how this is doing 3.92. Also a breaker of a long-standing wedge. We almost need the monthly chart for that one. And that's a strong move and a strong move up. People don't have power. Energies right now are stronger than any of the other commodities. It has to be said. Generally, natural gas, oil. Geez, oil is raining cash. So much for transitory inflation. Uranium, man, it's coming alive. Look at that move. Look at those last 2 candles. If this thing can get most disorderly, and it hasn't had a stretchy candle like that yet, or any of those yet. It is a move, pullback, and move into new highs. UEC doing great. So energies. This is a precious metals, but the key element that I want to highlight here is that, man, commodities have got room to go. Here's an agri for you, just for a little bit of data and an update from us. Yeah, they're not allowing me. Yeah, they will. We call this Robusta coffee People say, oh, your coffee is getting more expensive because of a drought in Brazil. No, it hasn't got anything to do with a drought in Brazil. It's got to do with your fiat proliferation policies that see more dollars required for a similar level of living standards. And we saw this inverted again, a double shoulder left, a big head dip here, and then quite a complex upside HVF and double shoulder in there that gave you both HVF targets and inverted head and shoulder targets with tendencies to overperform. Look where this baby has moved to. This is an agri, this is Robusta bean, which is the cheaper bean, and it has moved substantially, often used in blends to give a bit of kick. It's slightly more bitter bean and also has a stronger caffeine kick to it, where Arabica is more mild and aromatic and also a little lighter. So very strong move, very, very strong move. Your cheapest bean is getting really expensive. I mean, down here you were at 1070s, 1068. Up top there you're at 2134. Another good luck with that transitory inflation narrative. So a couple of things that have been putting the lie to the fiat proliferation game. Natural gas, of course, being one of them. The British battling the Germans, getting very little gas out of the Russians at the moment. Look at that move. If that's transitory, then you can call me. Got a bridge to sell you somewhere in San Francisco that's painted red. This is, again, it's not going to end well for these people. These were at all-time lows. Don't forget, this was a flush out. The pandemic was an absolute flush out. It was the final sell-off that caused deflation in commodities in spite of all the printing, and now it closed a lot of supply and put out of business quite a lot of things, and now they have to retool up to suppliers. Green has not replaced any of these things on any scale. That's why uranium and nuclear power is going up. That's why natural gas is going up. That's why oil is going up, because green ain't nowhere to be found. It hasn't filled the gap at all, even on a reduced level of economic activity. So they are masking how much fiat-based inflation they have created. By killing the economy, you are flying less, you are traveling less, you are driving less, you are eating less, you're cooking less, all of these things, and yet you're still getting inflation. So imagine if you return to normal consumption levels, then you add in all the supply chain squeezes they've created, you're going to have a heck of a thing. So yeah, a little bit of a commodity overview that we've thrown in there, because the energies have been particularly interesting as a result. I'm going to do a separate chat with you on the debt markets. We were the first. We said the pandemic of February, March 20 was the end of the bull market for bonds. We said it a long time ago. We've continued to say it. We said there's a secular reversal. People are going to have to up interest rates. We will stay. Go and hit subscribe. And after hitting subscribe, hit notification always. Do it now, always. The algorithm will not feed you our YouTubes because we do not advertise on the channel. You have to say, notify me always, every time, always. So the dollar has been rolling over a little bit because the euro is coming under pressure. We've covered this in our FX. We're expecting the dollar to walk out stronger, but it's not going to be single-mindedly blow off strong. It came down real hard. It's going to walk up in a low volatility fashion, and it's having one of its pullbacks after making higher highs and lower lows. But it's it's going to have a little bit of an easing. This supports gold, silver, oil, and all these others. It's got to go up, but it's got to go up slowly. Each one of these pullbacks, you're going to have further acceleration on your natural gas, your silver, and your gold. But you did get sell-offs. I wanted to just say to you on the oil, though, it's a much harder play to get sell-offs if we go have a look at that. So your precious metals got sell-offs. This is Brent. Brent is a monster. It's at 85.70. Look at that chart. You have one indifferent candle there that might be red, but it literally is a spinning top. You've got 1, 2, 3, 4, 5, 6, 7, 8. We're on a weekly time frame, and you've had 8 weeks non-stop up. 2 months of further bullish behavior after your return move to that falling wedge that we've illustrated so many times to you. US oil, exact same story. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. You're talking over 2 months. We've called this bull, we called the bear into single digits, and we've called the bull, and it's just playing out an absolute dream. There is a problem with energy, guys. This is going to see 100, it's going to see surpass, and whilst, as I say, this is initially a precious metals playbook, we're actually trading traditional markets, fiat, proliferation, and the hottest, most short supplied segment that is going to really punish these guys more than anything else is oil. We will trade triple digit oil again. It's going to come faster than people expect, and we will trade all time highs through them and beyond. And it's quite, and I'm not a merchant for throwing out big numbers. For me, I would say $250 oil would sound ludicrous now. In a year's time, it won't sound near as ludicrous. Not only will you take this 149 in due course, in my opinion, you will go into 200s, 250, and potentially beyond. But it's a different dollar. It's a proliferation Bolshevik communist world. And boy oh boy, this was your pullback on oil from here, where they hit you with repeated recessions. This was the mass affluent Greenspan inflation. There's no inflation, Goldilocks economy, all the way up into the moon. This is where the New World Order tax, that is oil basically, was just being pushed up as you were making money on your houses you were flipping, that turned into ATM cash machines that you just refinanced all the time, bought cars brand new, and everyone was living the life of Riley. Then we started to have correction, subprime correction. Then we had the 2014 oil correction. And then we had the what ended up being the pandemic correction, that we jumped in short on oil, and then a second time short up top here after the drone strike of Aramco. Turned out a little psyop that. And down. We said single digits would occur, and that was your 10, and you got your single digits. And since then, it's reflation, and those offshore wells all been down. So we've covered a lot here today. We've covered precious metals, we've covered energies. You need to be net long commodities, and the energies are the leaders right now. However, the metals will be wrong, but then they will play blow off, catch up, and there will be no availability. Expect even laws about legality of owning. It's going to be that bad. So there will be run-ins to the non-blockchain, non-digitized wealth of precious metals. Smart people will hold precious metals, and it's not what the paper price is, it's what you pay to get it. And if you can't get it, then it's what you need to pay on a black market to get it. And I think that's going to end up being your price determinant for precious metals. But it's going to be controlled and held down for as long as possible. But in the meantime, you can make profits in your oil, and you can turn them into precious metal holdings. This is how you should be playing it. This is all one correction to a bull market, and now you have the next leg up. This is all one. That's your bull leg one. This is your corrective A, B, and then your B, C leg, and now you got C, D, your third leg. It's going to be the longest. It will be 1.618 if Elliott wave plays out in terms of that. You're starting it from a very low number, and if you do 61.8% of what this up leg was, plus 1.618, you're going to see a number that's going to be scary for many people to believe, but it can happen. Okay, that's it. So quite a big bull call on the energies, but also a turning call for your precious metals. A turning call, slow but surely. This is stack on inside the discount window. Make your profits on crude and stack on the discount window that is being provided for you for silver and platinum, particularly, that I like, silver and platinum. Okay, don't forget, pop over to themarketsniper.com for specific trade methodology. That's the HVF method, and the Bitcoin Hunt Cot indicator, which has turned into a very useful risk on, risk off asset. just for a bit of fun before I finish this is data that is on Bitcoin on the futures market of the greatest insiders. Let's just for fun put that on the oil chart and see how it played out. Look at that call to buy over there. Wow, that is awesome. Let's put it on a weekly and see how it did. It bought the COVID long. It's been putting you long non-stop oil. Put you long the break, put you long the move there. By the way, it caught the shorts here. Look at that, the caution in the short of the grind line. That was the big sell-off. This is not even on oil data. This is your market long indicator for risk off and risk on. And right now we're on risk on. This is fiat proliferation, guys. Look at this spate of long signals. Last time you had a clutch was over here at the all-time lows. You had your shorts coming into this period over there. Okay, I'm Francis, the Market Sniper. Follow on at the Market Sniper on Twitter, at the Market Sniper, and we'll see you booking calls only for those that are serious. We're real busy. We've also got limited seats, and we have proper professionals that will take your call and show you everything about our community, our learning environment, and everything we do. So if you're serious about maximizing your wealth in these reset times, only then contemplate popping over to the site, book a time that suits you, and you will be well served by our professional staff. Until the next time, thanks for watching. All the best. Bye-bye.